Welcome to First Move, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me is my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton. Good morning, Lawrence.
Good morning. How are you doing?
Wow, it's not looking so good out there in the markets. Let's have a quick look. The CoinDesk Bitcoin price XBX index currently at $32,840. Bitcoin is down by over 5% over the past 24 hours. The CoinDesk Ether price ETX index at 2390. ETH also sliding over 6%. And the DFX CoinDesk DeFi index is at 187, also tracking losses of almost 9% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk branch as globally as a leader in crypto news, events, and data. Lawrence, I'm seeing a lot of red. How low can it go?
Yeah. Really low. Look, I'm serious. I mean, we're seeing a lot of. Look, we've for many months we've been talking about the institutional embrace of Bitcoin, but here's the problem with that. Those institutions own a lot of other assets. They own stocks, they own real estate, et cetera. And if any of those assets are affected, they're going to start to capitulate, and they're going to look at their portfolio and say, you know what, we just can't hold as much Bitcoin as we had before because we have to shore up some of our bleeding elsewhere. So when we see the Fed get a more, I don't want to say aggressive, but more proactive in curbing inflation, it's like they all of a sudden, all these funds are selling their Bitcoin because they're like, oh my God, my stocks are getting crushed. And we're seeing this. Look at the stock markets all over the world. They're getting slammed. Slammed. And people are they're no longer going to spend crazy money on NFT shoes. I'm just saying.
I did purchase an NFT shoe in excess of over $1,400 over the weekend.
By the way, 1,400. Yeah, that could have bought about 140 shoes for Ukrainian children. So I hope you're happy with that. This is how I
can try to make it up to them by walking and potentially earning back the money I spent on the shoes. So ROI in 100 or so days, maybe it'll be 100%, and then maybe some Ukrainians can enjoy the profits and the benefits of the excess. Okay.
Yeah.
But
this is how capitalism falls.
Also, another topic that everyone has been talking about over the weekend is UST. How long have we been talking about this, Lawrence? That, algorithmic stablecoins are not inherently so stable. And so we're seeing that now when a major market event is happening right now. And of course, UST lost its peg. And Luna Foundation Guard is now lending $1.5 billion in Bitcoin and Terra USD to defend the peg of its algorithmic stablecoin to the US dollar. Over the weekend, UST briefly lost its peg to the US dollar, falling to about 98 cents before climbing back to almost $1. At the same time, Luna dropped around 10%. Joining us now to discuss is Cory Klippsten, CEO of Swan Bitcoin. Good morning, Cory. So I guess we wanted to walk back and maybe you could walk us through the mechanics of how did UST lose its peg?
Yeah, it's a confidence game. Literally the old school definition of a confidence game, right? Which I'm sure we know what the short version of that is. But people are seeing the value of Luna, the altcoin that essentially provides the pegging mechanism where they trade in and out of Luna algorithmically with UST. And this was looking a little bit better when Luna was in the 40 billions of market cap, but now as of this morning, it's almost on par with the UST. So I think UST is 19 billion and Luna is 20 billion. So that makes people really, really nervous. And so, they foresaw that this might happen at some point and started making noise in the Bitcoin space about setting up what they called Luna Foundation Guard. And so this is this group of Do Kwon and 3 or 4 other insiders that control the keys for a few $1 billion. And they've been buying Bitcoin with it ostensibly to shore up UST, their pretend stablecoin, because again, as you know, not so stable.
They saw this coming, and by design, they're supposed to mint Luna to stabilize the peg, but now they're not doing that. So does their initial model just not work?
Their initial model doesn't work because it causes a death spiral, which is basically there's nothing different without this Luna Foundation Guard thing and the buying of the Bitcoin and the reserves, and frankly, with their insider relationships of market makers and large trading firms that will essentially take payment in, essentially it's the value created by pumping Luna over the last year or so, is where they're taking their payment to create these markets and try to hold the peg. So you've got Jump and Three Arrows Capital and a few of those guys who make all the trading fees on the arbitrage of holding the peg in the first place. They just want to kind of keep that thing going. It's kind of the same mechanism when you hear sometimes that big firms have sold a lot of covered calls, even on Bitcoin, and they have the incentive to keep that going because they're clipping that coupon for themselves and their clients for a long period of time. They actually have the incentive to lose a little bit of money going leverage short anytime Bitcoin starts to get close to the strike price of the covered calls that they've sold. So you kind of see that coiling. It's kind of a similar thing, like some of these market makers and trading firms that make a lot of money maintaining that peg. Up to some point, there's an amount of money that they will lose to keep that game going. But at some point, they're capitalists, they're mercenary, they have their risk models, and at some point it just breaks. It may break this week, it may break later today, it may break in a few months, it may break next year, but the bigger this thing gets, the worse it's going to be for everybody involved.
I certainly want to get into that, into what the after effects could be. But if we step back, as you mentioned, that it's a small group of people making the decision to take the Bitcoin, buy the Bitcoin, and essentially prop up their Luna. So a couple of things. First of all, where did they get the money to prop up Luna with Bitcoin? Is it from essentially printing more Luna and using that? I mean, where does it come from that it could be used in loan to the reserves? And remember, it's a loan, you said, so it'll eventually have to come back. But where did they get where did that source come from? And is it essentially essentially a version of, just taking some of the things that they would have minted and put it into Bitcoin and then out? How did that whole structure happen?
Yeah, so the Luna management team, the centralized team that controls Luna and UST, so I guess Terra is the company, they printed a ton of Luna and they only floated some of it, and they kept, I don't know what the number is, but something like half of it, maybe even more than half, it might be 60% or more of the Luna essentially on their balance sheet of their company. And so that's what they sold into the markets, essentially, creating that money out of thin air to be able to buy Bitcoin with it. And that's okay as long as there's plenty of demand for Luna, but there's not much demand for Luna anymore because people don't believe in their ability to maintain the peg anymore. And the only reason that Luna exists in the first place is based on people's confidence in the peg for UST.
We had Do Kwon on here a few months ago in a rather contentious interview. And he
was a little triggered.
He was a lot triggered, which is understandable because his business model. But one of the questions we asked him was, what makes you any different than Iron Titan, that whole collapse? And he said, well, the economics of Luna are much different than what you saw with Titan and Iron back a few months ago, which famously imploded. Is that really the case, or is that just sort of something that, he's just making up?
Yeah, I mean, the mechanism is basically exactly the same as the other ones. It was clever to set up the Luna Foundation Guard, which wasn't something that was part of their plans initially. It's something that they did essentially as a stopgap earlier this year because they foresaw that this would happen and they figured that could stave things off a little bit longer. I mean, the whole game here is how much of the printed out of thin air Luna coin that, Do Kwon and his VC insiders and trading partners, basically the big OTC desks came up with, and they granted themselves all this token in the shell game. And this is what's behind the 20% that they pay out on Anchor Protocol, is really because that mechanism works because they're paying to pump up the price of Luna while they exit their position. So the longer they can keep this thing going, the more Luna they can sell. That's real Bitcoin that they bought. If they can get out of this holding billions of dollars of Bitcoin at the end of the day, if they can, just continue to sell Luna into the open market and buy real estate in Manhattan, Long Island, or whatever it is they do with their money, like the longer they can keep this thing going, the more money they make. So there's a lot of incentives for the OTC desks and the Luna team to kind of work together to keep the game going.
I wanted to bring up a tweet from the Luna Foundation Guard. They said that essentially traders will trade the capital on both sides of the market, eventually maintaining parity of the LFG Luna Foundation Guard reserve pool denominated in BTC as market conditions progressively stabilize. And just for fun, there's a tweet from Chimpzoo tweeting, did Luna really buy BTC at 47,000 just to sell it at 34,000 to defend the peg? Now, they're not selling, they're loaning. But, and Do Kwon has clarified that the Bitcoin will be used to trade, but the stronger intent is to signal peg strength in the market as capitulation sentiment has set in. He says that the LFG is long Bitcoin. But again, aren't they supposed to mint Luna? And is this now then a BTC-backed stablecoin strategy? And what happens if BTC continues to go down?
Yeah, well, I think I'm blanking on the GP's name at Galoy Capital, but I think you've had him on as well at some point. I'm going to say maybe it's Keith. But anyway, he had a nice tweet about 2 hours ago, and he said, well, first, fitting that their trading partners get the last scraps of meat off the dying carcass that is Luna, but more importantly, lastly, there's another part that isn't said out loud. They would rather use BTC Treasury to stabilize than the natural UST to Luna conversion, which is obviously how they set it up. This is because they know if the Luna price keeps falling, the whole shell game falls apart. So they'd rather use that Bitcoin that they bought with their printed Luna token and sell that Bitcoin through their market maker into UST to defend the peg, because if they are using the actual mechanism the way it's set up in the protocol, you're supposed to print Luna. And again, as you noted, that's the exact same dynamic that was there with Iron and Titan. Then they know that they're heading into a death spiral.
So how does it end up happening? I mean, Mike Novogratz, he has his Luna tattoo on his shoulder. I mean, so what point does he get rid of that? Does he laser that out? I mean, how does it look like, and what happens to Bitcoin?
Well, again, this is a small amount of Bitcoin that they own, and there's plenty of people with larger size that could crash the markets at any time. I mean, there's players that have dumped more Bitcoin than what the Luna Foundation Guard holds in total just in the past few days. So I'm not worried about Bitcoin, and certainly not in the long run with Bitcoin. I think it's going way, way up in the long run. I think this is more just, check yourself before you get on board with supposedly bullish narratives. I think it's really important to have a critical eye and not cheerlead things just because somebody says they like Bitcoin and, the narrative seems mildly bullish. I think this is probably the worst false narrative that we've seen in the Bitcoin space since the fake S2F models, which are obviously really embarrassing for Bitcoiners to try to be pushing to anybody that understood stats and math and finance. We kind of got laughed out of the room with the S2F models. And I think something like this is, equally just getting egg on the face of Bitcoiners that have been cheering on a total Ponzi scheme and a scammer.
All right. Well, I think you've said it, Cory. Thank you so much for joining us. Appreciate you coming on. That was Swan Bitcoin CEO Cory Klippsten. Coming up, we've got a crypto markets update with asset manager Valkyrie. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XBX index currently at $32,903. Bitcoin sliding almost 5% over the past 24 hours. The CoinDesk Ether price ETX index at $23.96. ETH also tracking losses of just over 6%. And the DFX CoinDesk DeFi index is at 187, crashing about 9% over the past 24 hours. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Terrible day in the markets right now. Everything seems to be down. But joining us now to discuss is Stephen McClurg. He is Chief Investment Officer and co-founder of Valkyrie. Welcome, Stephen. And I do want to get to, you had a couple of announcements, but before we do, of course, we have to talk about just what's going on over the weekend and just how awful it's been. And what's your take on it? And also, what's your take on this discussion we just had with about Terra and Luna and the LFG?
Yeah, well, first of all, thanks for having me. Very good to see you guys. As far as Luna goes, I've always questioned the model of Luna and Terra, as well as these algorithmic stablecoins. Anytime that you print more money to support price, it's the same kind of lunacy that the Federal Reserve and the U.S. government have right now with printing more dollars to support inflation or to battle inflation. So anytime the markets are down, that type of model isn't really going to work. Speaking of the Fed, we just got a 50 basis point raise and the Fed fund rate, and the FOMC meeting is coming up again in June. We expect another 50 basis points then, probably another 50 basis points in July, and then a pause after that. This market right now really isn't surprising. All risk assets across the board are going down and will probably continue to go down. Anytime that there's high rates of inflation alongside the Fed rate rising with really no end in sight, you're going to see risk assets really drop.
So where do you see the bottoms? Where do you see? Do you have any intermediate term bottoms here for the likes of Bitcoin and ETH?
Well, I mean, all we can do is try to predict what federal and U.S. policy and global policy is going to be. Like I said, if the Fed continues to raise rates through June and July, we'll probably continue to get markets going down all the way through the summer. My expectation, though, is due to midterm elections coming up in November, we'll probably see the Fed pausing or maybe even lowering rates starting at the September FOMC meeting. So that might be the catalyst. And then, of course, midterm elections are always bring certainty to the markets, and we could see the markets going back up at that point in time.
I mean, you're saying lowering rates in the midst of a 9% inflation rate or 8 and change inflation rate? You actually think the Fed would lower? Or, I mean, at the same time, you think they're going to continue to sell bonds to try and raise rates elsewhere and mop up some of the excess dollars that have been floating around thanks to insane government spending and the like?
Yeah, I certainly believe that there will be a pause, but if the economy gets bad enough, I do believe that there is a possibility that rates could be lowered again starting September, maybe even October.
Wow.
What you just said, though, selling out bonds, that's probably the right move that the Fed should be doing right now. If you look at the yield curve is very important in financial markets and in risk assets. And right now, we're moving towards inversion. The way to avoid inversion is to really stop raising the lower end of the curve, raising rates that causes the lower end of the curve go up, and selling out more bonds at the long end. This would cause the curve, or at least the long end of the curve, to really adhere to market demand and market prices, which would probably cause rates to go up in the long end. So that's the better move right now, but we're just not seeing the Fed doing that.
Wanted to touch upon your big news. So Valkyrie has launched the XBTO Bitcoin Futures Fund, and it's the latest crypto ETF to win approval from the SEC. Also, a while ago, you also launched the Avalanche Trust, and you've already lined up about $25 million there. So taking a look at, first of all, the Bitcoin Futures Fund, I guess, what is any insights into how Bitcoin is doing given the trading of Bitcoin futures, and what's your overall outlook on Bitcoin?
Yeah, Christine. So we haven't launched it yet, and we can't really speculate on or say when we're going to launch it until we actually do. But the important part is that we got approval on this. We had actually confidentially filed a 1933 Bitcoin futures ETF about a year ago, and it just got approval now. One of the important pieces in getting approval on a 33 Act structure is that is the structure that a Bitcoin spot ETF would have to be in. Given that Bitcoin is not a security, it can't fit into a 1940 Act fund because 1940 Act funds are RICs, meaning that they have to hold a certain percentage of securities in order to be viable. So the 33 Act approval is really, in my opinion, the next step towards the potential of a Bitcoin spot ETF sometime down the line.
Yeah, I was going to ask about that because, as you mentioned, it was the first, and a lot has been made actually about you guys getting that 33 Act fund approved. Do you think, have they given you any indication? Yeah, people keep throwing around the month July as a potential for when they would approve, say, a 33 Act, a spot ETF. Do you think that that's plausible? Has the SEC given you any indication whatsoever that, hey, guys, it wouldn't hurt you to get ready for this?
Yeah, I don't believe July is on the table at all. Really, the commissioners of the SEC have made it very clear, particular Chairman Gensler, that until an exchange or until exchanges that trade Bitcoin are monitored by the SEC, which they are not at the moment, that we will not get a Bitcoin spot ETF. So that's at least a year away. 2023, 2024, maybe. So we're not expecting anything anytime soon. But what we are doing is working towards making baby steps at Valkyrie so that we can get just a little bit closer each time. And we do believe that this 1933 Act approval is one of those baby steps.
Meanwhile, you have this Avalanche trust. So I'm wondering why Avalanche, and what's your outlook in these altcoin prices right now?
Absolutely. Well, we're always looking for great enterprise blockchain solutions outside of Bitcoin as money. We really focus on protocols. What's the next Ethereum? What's the next enterprise solution that's going to have really great things being built on it? And Avalanche is one of those potential protocols that we really like right now. They're doing everything right. We're very supportive of them. We're launching a trust, obviously, into a very bad market, but I believe that building during bad markets is always the best policy, as long as you can. So we're going to continue to build. We're going to continue to launch innovative products into this market, and then when we finally get a turnaround, hopefully we'll be in a very good position.
And just one more question before we leave, but Bitcoin, how low do you see it going? You mentioned Fed rate hikes in the future. How low can it go?
I think Bitcoin could go much lower. My target is probably somewhere around the $25,000 mark is probably the bottom. Even at this level, I'm buying. I never try to pick a bottom, but right now, given how much money has continued to be printed globally, given that we have a $33 billion bill on the table in the US, which means even more government spending, even more inflation. Anything that has a limited supply is really interesting right now. So I'm buying here. I'll continue to buy all the way down to 25,000, maybe even lower.
All right, Stephen. As always, a pleasure having you on. Appreciate your insights and congratulations on this latest trust and the latest SEC approval. Thanks for joining us.
Thank you, guys.
That was Valkyrie CIO, Stephen McClurg. Coming up, we've got DeFi Yields platform Coinchange, and checking in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick.
Good morning. Happy Monday.
Happy Monday. All right. Sanctions talk. What's going on?
Yeah, so on Friday, the U.S. Treasury Department's Office of Foreign Asset Control, i.e. its sanctions enforcer, announced it was adding Blender.io to the list of specially designated nationals, saying that this was a North Korean mixing service used to launder proceeds from the Ronin hack, as well as ransomware attacks and other various North Korean-led cyber attacks.
So is there any hope of recovering some of the funds from that Ronin Axie linked hack?
I mean, at this point, it's probably still too soon to say. A lot of the funds seem to have remained in, some centralized wallets, but a lot of them have been moved through, not just Blender, but various mixing services. And those funds, at least based on public data tracking, we've been unable to track them through, the service. We've been, looking through blockchain explorers and things like that to try and see if we can identify them. It's possible that, blockchain analytics firms might have a better, chance of doing so because they have, more sophisticated tools. But, one of the concerns is that this is being used to obfuscate the source of these funds and obfuscate the destination. So probably, it's going to be a lot of work. And it would also mean that, a company or a government has found a way to unobfuscate mixing services.
Mm-hmm. And looking ahead to... Go ahead, Lawrence.
No, do we know the involvement, how heavily the involvement is of the North Korean government in the crypto markets? I mean, have we ever really figured out just how much they are meddling in things?
I don't think the full extent is known. I mean, we do know that the North Korean government has been using crypto for a while. We know that, for example, there are, actual trades that they conduct to, basically use crypto as a means of exchange for some of the physical property transactions that they're engaging in. Our colleague Ian Allison wrote a great piece on this, on ship-to-ship trade a couple of years ago. But I don't think the full extent is known. I mean, certainly at this point, it seems that the North Korean government has been responsible for quite a number of cyber attacks that have resulted in, crypto being sent to wallets that they control. But, how much total is unclear. And how much they've been able to, turn into money that they can use to buy whatever it is they're buying, again, also unclear.
Do we have a sense of what they're using the crypto to buy?
No, not at this point. I mean, it could just be that they're using it to buy, more cyber equipment. It could be they're using it to support its nuclear program, but it's all speculation at this point. I haven't seen anyone suggest that they have a firm idea of what the funds are being used for.
Fascinating. All right. Well, Nick, thank you for monitoring that developing story. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
There's a brutal exit from the crypto markets, but there was also a brutal exit from DeFi over the weekend. Some $27 billion in value that was locked in DeFi has gone out, leaving a little under $178 billion left. It's now the lowest level of the year. That's according to data site DeFi Llama. So joining us now to discuss is Maxim Galash. He is CEO of DeFi Yields platform, Coinchange. Good morning, Maxim.
Oh, I can't hear you,
Hello?
Maxim. You might be on mute.
Hi, guys. Yeah, sorry.
Hey, how are you?
Good morning. Good morning.
Great having you. Yeah, so...
Everybody else on the market.
Yeah. Well, as I was saying, we had this big exit out of DeFi over the weekend in terms of value locked. What happened there? What was it? People pulling out? Was the value? Was it also that value decreased? What percentage of that of which affected the total value locked?
Lawrence, I believe this is kind of relevant to the earlier conversations with the other guests as well. I mean, macroeconomics, overall market, fear of depegging, institutional players, right? So DeFi has been growing recently for the last 6 months, and there was a lot of institutional capital because it's still pretty inaccessible for the general public and for that retail capital that was flooding the general crypto markets after the stimulus. So I would say this is institutional play. This is the DPEG and fear. This is macroeconomics. Everything influences, and it's really hard to quantify one criteria against the other. I would say it plays around the same lines as the general crypto market under the same umbrella.
Yeah, we're looking here now at the DeFi index, and it's obviously it's taken a massive tumble, and as you mentioned, there was of course this UST was there's a lot of concern about UST, and UST is heavily used in the DeFi market. So is that what we're seeing here, as you were saying? Is there at least a large part of that due to concerns about what's going on with Luna?
Listen, I'm less worried than definitely the conversation you guys had before. I mean, I'm not as pessimistic. We monitor the markets daily. We have a research team controlling about 85 different data points on different stable coins in the pools. So Terra is still, more or less currently right now, it's hard to make any predictions right on the market. But right now it's still very well backed, right, by the $750 million reserve, so Bitcoin, right? There's a lower volume right now on Curve. That's kind of the swap, right? Ability to swap to the other stable coins. So there's a lower volume, but there's still very, very good. As an example, last couple of weeks, let's say 75% of USD supply was on the Curve. Right now, only 59. So it is decreasing, right? But they're also decreasing the rates and the payouts. So at the same time, so they're trying to buffer it out right now. All this market sentiment that happens and all the fear. I agree to that. It's a lot of an emotional aspect of belief or disbelief, right, in a certain asset, as with any other asset, right? Even with gold, that's proven itself for the centuries, right? But even though any asset is driven emotionally on the market, so same for the UST, that mechanics stays, and it's more on the abstract layer as a DeFi, right? It's more of the abstract layer than the any other market. But the fundamentals are still there. I believe that there are still fundamentals that support the price and support the peg.
Okay. Maxim, I'm wondering, what is the strategy you're recommending, during these volatile markets in DeFi?
Overall, look at DeFi, it's a very global and decentralized market, right? So it's originally been engineered to democratize access for people without ability to go to the broker or centralized counterparty. So with all this geopolitical uncertainty right now in Europe and the war in Ukraine, a lot of people are choosing their own key and their own crypto against the centralized bank, right? Especially with the negative interest rates in Europe, and especially with all the pressure from the war and the geopolitical fear, right? So I believe that DeFi is still a good place to be, still a good place to earn your yield. And if you're a pretty novice, it's better to choose less sophisticated instruments than, let's say, UST, or try to keep that. You have to be able to monitor that and be professional enough to evaluate the circumstances of the market. But you can play in AVA, you can still use the DeFi markets to generate the yield for your liquidity. So I still believe that there's going to be more users, right? As there's a lot of geopolitical uncertainty.
Is there any protocol you're recommending in particular?
We just issued a research paper on the regulated DeFi with Fireblocks. It went live yesterday. So Ava, Maker, there's a few others. Compound just look at the blue chip protocols and DeFi that's proven themselves in the last couple of years. It's still a very, very, very nascent market. There's not a lot of historical data or time that those protocols went through, right? Or different, as we're seeing right now, as one of the moments when the markets are crashing. So we'll see how the resistance happens and what are the floors and what's the liquidity are. But I would say choose the blue chip. Go to Ava, go to Compound, Uniswap.
So I have to ask, because I'm sure it's on the minds of a lot of people this morning, and that is this: you have asset prices falling in other markets, and they've been serving as a catalyst for crypto's prices to fall. Over time, if crypto prices continue to drop, there will be a dry up in demand for leverage because, I mean, look, yes, you could probably leverage a short position, but really people like to leverage long positions. So what happens then in the DeFi market when the demand for leverage dries up and does the DeFi market suffer tremendously at that point?
Lawrence, it's a very good point. I mean, all your questions are very tricky. And I think I won't be able to give you a definite answer, but I think there's multiple factors to play, but leverage as well. So there's a lot of institutional capital that's, as you've mentioned, drying up right now. 27 billion has been pulled out. We're at 170, but DeFi, I think it's still more like it's more of the unknown territory in terms of leverage as well, right? So it's really going to be. I won't say it's over leveraged. I mean, first of all, I think it's not over leveraged. I think there's a lot of more of the nascent protocols that allow you to do those pyramiding schemes, right? And lend and borrow over the asset for the multiple times and create those cakes and that's definitely will be an effect. But I don't believe there's a majority of the capital right now is in the liquidity and lending pools, right? And most of that is a single transactions. So lending or borrowing, leaving the assets there and letting them holding the LP token, right? That's programmed a certain way to represent a certain value, right? And pay out you certain fees. So there's not much of the arbitrage or still the leveraging. I think it's not compared to the centralized markets right now, to the centralized crypto markets, at least to what we see.
All right, Maxim.
I won't recommend. I mean, overall for the retail customers right now, especially only for the crypto natives, right, who can understand and monitor this market. It's a very comprehensive market to make sure that you'll know what you're doing yourself. So if you're not comfortable of spending 24 hours a day and keeping your own keys, you'll find a professional discretionary manager like Coinchange, right, to do the magic for you. So I would rather say, like, in those markets, use someone rather than try to do it yourself, especially right now.
All right, navigating uncertain markets. Thank you, Maxim, for weighing in. That was Coinchange CEO Maxim Galash. Let's check in with Crypto Twitter for our tweet of the day. This is from Circle CEO Jeremy Lair tweeting, "I sleep like a baby," and so do our users. And he's responding to Terra's algorithmic stablecoin losing its peg. Circle's USDC stablecoin has not lost its peg during this market turmoil. They claim to be fully backed by US dollars. All right.
I mean, he can sleep like a baby. Quite a lot of other people who are involved in stablecoins act like babies.
That's a whole other conversation, Lawrence.
Yeah, yeah. And you could also, speaking of babies, with $1,400, you could buy a lot of baby shoes. Just saying.
Oh, you just wait. Let's just see, 100 days down the line, whether or not I make it back. Mm-hmm. We'll do an update. All right. Thank you, Lawrence. I'm your host, Christine Lee. Meantime, check out The Hash at noon Eastern and All About Bitcoin at 3 o'clock. You're watching CoinDesk TV.